All right, traders, welcome to today's end of day market recap. This is Christian from Hertz Tribeca Trade Group, and it is Thursday, July 14th. So another day that definitely is not dull. A lot of moving parts, definitely a lot of price action, something for everybody today. Why don't we start with the economics that came out and just kind of talk about how the day unfolded. I'll go over a couple levels to watch in the indices, and then I'll give you 4 or 5 stocks that are on my radar. And if that's something that you guys want to see on a daily basis with these end of day videos, possibly 3 or 5 stocks that I'm focused on, which I pretty much do in every one of these sessions, but I'll just make it a little bit more formal. Hey, these are the 3 stocks that I'm watching. Depending on depending on the day, it's 3. Or it could be 5. So, hit the like button on the YouTube video so that I get an idea if that's what you guys are into, and I'll make sure that I cover that segment towards the end of the video every day. All right. So and by the way, risk disclaimer in front of you. Everything that we're going through is for information purposes only. Please read the full risk disclaimer here. So yes. Economics came in, right? And the headline number was 1.1, which was a higher reading. And so was this year over year number. But when you look at some things like ex-food and energy and also I guess they had trade in here too, 0.3 versus 0.5. So again, mixed. I'm not an expert in terms of, analyzing every one of these numbers, but yeah, I mean, some of the numbers were a little bit lighter than what the expectations were. And of course, when you look at everything, final demand month over month was actually up. So kind of mixed. All right. So we did hear from a couple Fed speakers today too that mentioned, I think it might have been either Waller. I get these Fed speakers confused, but I know Waller spoke today. In any event, one of them said that the market may be getting ahead of itself in terms of 100 basis points, right? One percentage point for the next Fed meeting, which is end of month, July 27th, right? So they're kind of bringing that in a little bit, and that's just one Fed speaker. You never know if the one Fed speaker knows what they're talking about, or if they're just kind of, basically giving you their opinion, because it's really Powell who's going to make the decision. All right, but in any event, when we look at the Fed fund futures this morning, right, this was over 90. Right, so right now it's 0.82. This morning I think it was like 0.91, which means almost fully baking in or pricing in a 100 basis point rate hike for 727. So this came in a little bit, right? So you could kind of add that to one of possibilities that why the market rebounded a little bit today is just that they brought down the super hawkish tone of 100 basis points versus this. So we're closer to this point back to 75 basis points. Remember, the Fed usually moves in increments of 25 basis points, right? 0.25 percentage point. So a quarter of a percentage point. So it's either going to be 75 or 100, right, is what we're looking at for just a couple of weeks away. All right, so that's what we're dealing with, and the price action has just kind of been all over the place. So a couple levels, that are a couple things that I'm watching. Listen, I don't want to waste your time with this, because we're basically back at the point of control, which is where we opened up for the month, again using volume at price. What does that mean? It means that there's a lot of indecision right now in this marketplace, because this dotted line, right, the point of control is where the majority of volume happened in the previous period. What's the previous period? Because we're on the daily chart. Right? The previous period is the last month, which is June, right? So when you look at this volume profile, the majority of volume happened right here. So we're really kind of sticking around this level. or this area, and that just means that there is a lot of indecision. Like the buyers and sellers are having a tough time kind of fighting with each other to see if they want to basically push this out of the range. Remember, not only are we right at the point of control in the value area, but we're dead smack in the middle of it, right? We're not breaking one way or another, right? And that may not happen for this, I don't, maybe it happens at the end of the month, maybe it happens. Again, I'm not making a prediction here. I'm just saying that with this size of a value area, which is pretty long, which is pretty big, right? You're going to need some heavy volume to kind of push things around. And then, of course, don't forget, we're going to have a lot of names that are reporting earnings. So it could just be that investors really don't want to do too much at this point. It is in the middle of July until we get earnings reports, till we get the next Fed meeting out of the way, right? And then maybe there might be a little bit more of a move one way or another, because the joke that I've been talking about now for the last couple of days is that you go back not just this month, because we're prices back to where we started this month, but we're also, if you go back to like 6/14, which is 2 months ago, which is not just the beginning of the month, but is a month ago, right? The price really hasn't gone anywhere, right? All right, so that's that. There was a couple of things, and I'll talk quickly because these are a little bit minor points, but what was kind of one of the issues towards the end of the day is that we sold off at the end of the day, right? And we weren't able to. So again, I'm looking at the 1 hour chart here, and this is the value area for the week, right? We kind of slid, even though we rebounded after that CPI number yesterday, right? We fell apart at the end of the day, right? And there was a little bit of a try to kind of get back, right? And then we explored some lower levels, and we're right back. So again, even though, so just like yesterday, there was a little bit of like green shoots, in terms of the bounce, and a very nice bounce today too, but we didn't take back any technicals, right? So you kind of have to curb your enthusiasm, because it's nice to see. Usually when you see a rally like this from the lows, you're like, hey, the buyers are are coming back in force, and it's the buy the dip mentality, but we're really not going too far, right, to the upside. And 3803 has not been retaken, right, which is where we broke down yesterday, right? So not that strong. Also, if you look at the 5 minutes, so each one of these time frames with a different value area, we did a webinar last night for members, and we broke down a lot of different charts where you can kind of use the value areas as a roadmap, right? Well, we stalled. Again, it's tough to say that we stalled because we made this huge move from the lows, but this was a really nice move, but that's as far as that we went. Again, that's not to say that we can't continue to go further, but you kind of just have to put that with a grain of salt. I also drew, like I did back here. So this is kind of interesting because I didn't realize I had these other ones drawn in here, but here was, remember back all the way in February, I had one of these triangles that I drew in here to see which way we're going to break, and we definitely broke to the downside and kept going there for a bit before we retested. So we're at another decision area, I think, anyway, or we're getting close to a decision area. Eventually, the price action will break one way or another. To try to come up with your crystal ball and figure out the day or the week that happens is much harder to predict, but we are going to break one way or another. And you could see I put in a downtrend line in here, and I put one in here. So we'll have to see how this pans out. I'm not going to make the prediction. I will continue to watch some of the shorter time frames for hints, but it's really tough, right? So we held support twice. The Qs did show some strength. Although it wasn't huge, but it was a little bit of relative strength, right? Because let's go back to these 5 minute bars just for a quick second, right? S&P took out the lows from yesterday, right? So here's what I mean by relative strength. Now, when you look at the NASDAQ on the 5 minute, right? That did not take out the lows from yesterday. So again, we're continuing to see, even though it's it's not a lot of relative strength, it's a little bit, but there's a little bit of, there's a small difference there. We did not break the lows from yesterday in NASDAQ. So again, we're basically, we did, I put this chart out earlier saying, oh geez, we're not going to be able to break into the bottom of value. Well, we actually did that today. That was not a bad move there, and towards the end of the day. All right, so again, when you back this out and look at the daily chart, we're just going to need to see more confirmation of one way or another that's happening right now in this market. All right, so I think that's enough, you know, in terms of the indices. You know, stocks that I was kind of impressed with today, I'll go right to the big cap one, right? Apple, right, has been hanging in there. It's also, this is also showing relative strength, right? Because it is above its 50-day moving average, right? So if you like Apple and you were willing to try a trade here, what I would do is put your stop right around 144. All right, and maybe this can make it back to the 200-day moving average. Note, it's going to have earnings. It also did get above the week's high because this thing rallied up to this version point of control, right, where a lot of buyers and sellers previously met and stalled. However, it has returned back to that level. You could also use 147 as your stop, right? And then you can maybe shoot for 157, which lines up with the 200-day moving average. So there's a 1 hour VPOC and there's the 200-day moving average. That's how I would kind of play this if I were to go long Apple here. A couple of trades that I did today, Costco. So this will be the number 2 stock that I talk about. I went crazy with taking targets. I was just very, I didn't like how and I don't know if I don't think I covered this yet in this video, but the breadth was horrible when we started the day, right? So you could see this on the, so if you go to the bottom of your screen, right, and I'm going to expand this for you, but do you see how bad the volume was? And sorry, the breadth was. This indicator, by the way, what it uses is up versus down volume, right? So it's not only just advancing versus declining, but we're associating volume with the advancing versus declining name. So it's up, down volume, right? And what you get is what the beauty of this is you could tell how extreme, right, the pressure is for the day. So you know, this was a pretty big reading, right? I think it was one of the biggest readings that we've seen in weeks, right, in terms of the breadth. Remember, the biggest was back in here that we saw, right? But this was probably the worst breadth that we've seen, you know, in some time. All right, so that's what concerned me. So I was waiting for this break for Costco today, and I almost traded it here at 9:45. And I said, you know what? I don't want to get fooled. I've been fooled a couple times by false breaks of the day's range, the value area. So I waited for it in here, and it worked out much better than I thought it was going to be. And I just was taking targets like every couple of bucks because I was like, I don't trust this market. Sometimes people ask me, new members ask me, hey, how many targets do you take on a trade? And the answer is usually like 3. Right, but if I don't like this market, I'll take 5 targets just to piece out of the trade, and make sure that I'm locking in profits. Right, I think so. Today I took like 4 targets in Costco, so this worked out very well. So this was just a day trade for me. I lined this up this morning. We talked about it in the pre-market session. It was one of the only ones that I said, hey, I'm interested in a trade in here at Costco. So now, you know, because I'm out of the day trade, I would watch to see what it does at the 200-day moving average. Right, let's see if we could find any clues here on the weekly chart. You know, the price is back above the value area on the weekly chart. So, you know, this is kind of interesting. 1 hour, you know, next area of resistance is going to be 528. Right, and that's somewhere, yeah, somewhere in here. But again, the 200-day moving average will have to be retaken. So first time back at the 200-day moving average since May. All right, so that's the number 2 stock. All right, Also, a big story today was what the semiconductors did, right? So the semiconductors, have been under pressure. Let's just go to the SMH, right? We'll look at the whole sector first. I mean, this is a tough chart, right? It's in a downtrend, right? You can make your own predictions if you like to about when this trend is going to reverse, but price is telling us something right now. The semiconductors are in a downtrend. Right. And what do I usually do for in names and downtrends? I like to wait until I would rather be a little bit late, waiting for this to reverse and find the trend rather than try to pick a bottom here, because this thing has been going down for months. Right. So a check back into the 20-day moving average, this could have given you a day trading opportunity. Look at where the ETF stopped for the day. Right at the top of value. So again, it's what's nice about again, I talk about the value areas in every one of these videos, but what would I do with this? Right, well, I would make sure it can get above 211, and if you want to initiate a trade, then I would say, okay, then put your stop price back at just inside the value area, which is around 209. Right, so look to play this move, but wait for the confirmation that it's going to break out. Right, again, that's for just a shorter term trend, if you're looking for a short-term swing trade. But again, it's in a downtrend. So what's and what I generally like to do as well, as there is a story that's going on here in the semis, the Congress may approve a big spending bill for the semiconductors for next week. So it has potential to rally into that event. One of the best looking charts in the group is Qualcomm. Right, this is a name that we've gone over a few times. Let's look at the weekly chart. What initially brought my attention to Qualcomm is that we started to see a pretty decent amount of call positioning, right? And we saw that call positioning right around the bottom of value on the weekly chart. So that's a big support level, 121, and that worked. Right, yeah, 121. That worked pretty well. We've bounced pretty significantly. You're going to have, again, overhead supply, coming in around 149, 152, right, on that chart. We also did manage to take out this virgin point of control and kept going. That looks pretty good. And on the daily chart, you're going to have to worry about up here too, right? So that may be, again, in this market right now, it really helps to plan out your trades rather than say, oh, I'm going to go long and, it's the name should recover from here. Right now, this market is trading things from point A to point B, right? And knowing where your stop price is before you enter the trade, right? That's what's working in this market. Being very quick to adjust when something doesn't work. All right, so we talked about a few names. Was there another name? Oh, Dollar Tree, right? And Dollar General too, right? These stocks are looking pretty decent. Remember that crazy move that these things had on earnings, right? Both Dollar Tree and Dollar General. I forget the reason why they got hit. I think it was Target and Walmart earnings that brought the whole group down. And then these names reported earnings like a week later, and they completely corrected back. All right, so VPOC takeout. We're back to this VPOC, and let's see if this stock can begin to kind of trend back higher. Right here, I went long Dollar Tree today. But I think Dollar General also looks interesting. I kind of like the chart of Dollar Tree just a little bit better. So that's the one that I traded. All right. And then the final one to look at, so here's my entry at the end of the day, is just what biotech did today. I did this kind of stupidly today. In my, well, this is hindsight trading, right? I got out of my last portion of XBI that I went into yesterday. Again, I just, the market looked too shaky. The breath was too bad. And sometimes I would rather be a little bit conservative, even though getting out of the last piece of this for a loss, so be it. It didn't really move too much from where I got out of it. But at the end of the day, like, this is not like, consolidating this move is not a horrible thing. Right, let's see if this can consolidate and start to kind of move back out of this possible bull flag and get up to 87. Right, so let's see if there's an alert to set on this. It seems like it's locked inside the value area for the week. Maybe next week might be the the week that XBI begins to kind of trade out of that range again. All right, guys, that's it for today's video. Thank you for watching. Let me just bring the spreadsheet back up. All right, and yeah, I mean, I like to give a little conclusion at the end of these videos, but just take one day at a time. I would say, we were talking a little bit about this at the end of the day in the trading room about how adding into strength just really, really hasn't worked over the last, couple weeks, couple months, and so on, and basically 2022. So, even though I'm going through some of these positions, there's no way it's very difficult to put on these positions. And let's say tomorrow's economics, let's say something bad happens, or something internationally happens, right? Because we're dealing with a very macro tape right now. Right. And the market, falls apart a little bit in the pre-market session, right? Automatically, you're putting yourself in a hole, right? So it's better just to kind of be patient and not load up in positions every time that there's a little bit of green on the tape, and just be patient and just get through surviving and advancing right now in this market. If you're an investor, right, investor or trader who's doing more things on the long side, is basically just trying to get through to better better market breadth, better participation where the institutions are in buying, right? And you just have to be patient for that to materialize and not get too overexposed. All right, guys, have a great night. See you tomorrow.